So what we're going to cover off today is scans. The first scan video was, real general, what's available on StockCharts. How do you get to the scan engine? What can you look for? How do you use some of the settings on them? So today we're going to get right in and we're going to answer some of the questions that people sent me about scans and how to write them, how to edit them, how to debug them, and then get into alerts instead of scans. So with that, let's proceed on and we'll start there. So one of the most important things, if you enter the word scan into the site search box, that's going to bring up all of these options. So if you just go anywhere from the ticker cloud or any of the home pages, so in this case, let's go to the ticker cloud. You can take this and just up here where the search button is, just type in the word scan and you're going to get a huge list. Now, these blogs, some of them are quite old, but they've been, they're still available. And then there's all of these CS ones are the chart school articles. And then all of the SU are the StockCharts support documents that have been written to help people with scan. And so there is lots of stuff here, and I'm pretty sure if you've asked, if you've got a question that you'd like answered, lots of them are in here. But I'm going to work through all of the scans, and don't be afraid to scan all the way to the bottom to find these. But the biggest thing that I think is most important on the scan is that it is very simple. So don't be overwhelmed by it. There's lots of resources to help you through this if any of this is a problem. So the first thing I want to cover off, let's just zoom in my screen a little bit here, is I had put out a note and asked for some scan ideas, and I got a couple feedback ideas, and then I got a couple of things that were not really scannable, and I'll explain what that means. So first of all, one of the big things on a MACD or on anything that you're looking for, a scan is looking for a technical event. So it's looking for something crossing something. And it doesn't have to. It could look for price at $24, but that doesn't mean much if there's so many stocks with a price of $24, that really doesn't tell us anything. So usually what we're doing when we're looking for some sort of a technical scan is we're actually looking for the price to cross above a previous high. We're looking for price to cross above a moving average or below. We're looking for an indicator to turn, to cross up and give us a signal of some sort. And we're looking for different technical events that are giving us a clue that something's going to happen. So one thing we haven't figured out how to do is scan for tomorrow, but we can scan for today. And so the important thing is, a couple of the questions I got was, can you give me something that will find this just before the breakout? And the right answer is, well, we don't know it's going to break out because it hasn't broken out yet. And we don't know if that's 1 day or 30 days away. So there can be lots of setups. A good example would be stocks trying to break through to new highs and they just keep banging their head for 6 months. And then all of a sudden, one day they do. You really do want to wait until they do. So, so just to make sure, a technical event is what you're actually scanning for. So let's talk about that. So here was one scan. For instance, let's use RSI and full stochastic 14,3,3. On one side, you would put the RSI, so that's over here. And on the overlay, you would put the full stochastics. And I would like to scan for the breakout of the overlay. How do I do that in advanced scan? This is a great example, and what I want to point out on here is that these two are overlaid. Now, they both happen to have the same scale, 0 to 100, so that was okay. But if you would have picked something like a MACD that was breaking out instead, the problem you would have is that they're different scales, and so a cross on two different scales doesn't mean anything. So if I put a $2 chart on top of a $100 chart, the scale on the left will adjust so that they both fit the high and the low. So the one on the right will adjust to the top of the chart and the bottom of the chart based on the timeline, and the scale on the left will change to make sure it touches both ends. depending on what my start date is, I can change where those points cross. So if something doesn't have the same scale, it's a problem. You can't use the cross of two things. So that's a really important point. And when you're looking for that sort of outcome, be very, very cautious, because if I change the start date, it changes the outcome. So in this particular case, both of them have the same scale, and the person wanted to find a breakout of a full stochastic above 30 while overlaid on the RSI. The RSI and the stochastic have nothing to do with each other. So in this particular case, they would work together. So let's just go get a chart, and on this chart, let's just go to the ticker cloud, pull something up. So sure, and I pick a low volume something. Let's just go to Apple. And what we want to look for here, so in this particular example, they had RSI, and then they had, so that's below, and then over here, they want a full stochastics of the RSI. And the problem with this situation is you're looking for the full stochastics of the RSI, not the full stochastic of the price. So you're looking for an indicator on an indicator. And while it can be somewhat helpful, a lot of times what you've done is you've moved so far away from the price that the data isn't that helpful. So knowing that the RSI went all the way up like this is very valuable, but knowing that the full stow, as an example, dip down here, may or may not be meaningful. And we know from the MACD that the price looks like it continued to rise through this period. But all the way down through this other period, you got, signals that didn't help. So I think it's really important to make sure your signals are not too far away from the actual event that's happening. So in this particular case, I think the full stow, let's just go grab it. The full stochastics of the RSI, I'm not sure that the data is any better with that. Like, you got this deeper signal here, but I think you're better off to use the full stow of the price, because you can't trade RSI. You can trade price, but you can't trade the RSI. So I would be very, very cautious whenever you're trying to use an indicator on an indicator. Maybe it's a moving average, but something like that. You can use a cross for, let's say, the 50-day moving average of a stock and the 50-day exponential moving average of the stock. And when they cross, those might be valuable. So let's just put those up as an example of what I mean. Well, I guess I could have left that at simple and put this as exponential. And we're going to go with 50. And what you find in this particular case is the two work okay. And then right here, you got the cross where the red went above. So the exponential moving average started to turn up, and it stayed up until it got into here, and then it stopped, and then it turned back up here, and then you wanted to buy it again. And so you could use something like that. But again, you're using the price of the stock to help determine the moving average. So I think just be aware that use caution when you want to use a scan, or sorry, an indicator on an indicator. It might not tell you what you're looking for, and you get too far away from the price. And then, so the second thing was how to scan for higher highs for the past X number of days on an indicator. Let's take the RSI. So sometimes it will stay in a range for many weeks, and I'd like to be there when it breaks above that range. So the problem is to find the break from those days. And this is actually a very doable thing. So in plain English, I'm asking, show me all the stocks within a certain dollar value that the RSI does not go over 55 or whatever, and then breaks out above 55. But check this for the past 1 or 2 months or maybe 3 months. So this is a much more valuable tool, and that is possible. So I've set up a whole bunch of these already just to make sure that we can walk through them. And so I will be picking up the pace measurably as we work through these, but I just wanted to show everybody just some general concepts. So here's yesterday's max. For 55 days, we wanted the RSI to be less than 65. And now we want the scooter to be greater than 75. So we wanted the RSI to always be low and then run it, or we could say yesterday's max RSI was less than 65, and let's just go get our technical indicator. Where are we? There we go, RSI, and we're going to add that. And RSI today is greater than 65, and run scan. And we got 2 things that met this. So we're just going to go quickly look at them. And what we have here on this particular stock, we're going to need to put both the scooter on there, and we're going to need to put the RSI. And we want this to just be above. And we're going to take this. So here is the RSI, and we can see that it just couldn't break out here. And now all of a sudden it is. And that is a great thing to look for. So as an example, it was staying in bear market territory, and now it's starting to break out. And sure enough, this is a pretty nice place to look at this particular stock, and a nice little move. So let's go back to what the scan was talking about. There we are. So what we were doing here was we wanted a scooter, and we used just mid. We could control the size of the group that way, or you want to trade more volatile stocks, we could use large, or we could not have anything in the scooter definition, and that would give us stocks, ETFs, and stocks of all sizes. It'll give us the Canadian and US market. So we might want to say, start this off with country is US, and put in our bracket and type of stock. And now that's going to control the country. So we're only going to get US stocks, and then the scooter's greater than 75. And yesterday's max was less than 65 on the RSI, and now the RSI is greater than 75. So we could we can check the syntax and make sure I haven't screwed anything up and everything is correct. So we're going to run this scan. So we go into scan results, and now we have a few more. So let's just go take it doesn't seem to matter. This one has a closing price of $82, or sorry, that's just a scooter. There's the close, 24. Here's 5 below. Let's look at this one. Okay, so reasonably priced stock, but all of a sudden the scooter is starting to accelerate. And again, we just need to change this out and add in RSI. And we're going to put it above, and we're going to make the auto, and we're ready to go. Okay, so same idea here. We've got this kind of zone, and then we're breaking above the zone. So that one's a really nice option. And you could have done it back in here. That same scan would have been, the stock wasn't doing anything, and then all of a sudden is starting to do something. And so you want to start getting more interested. Now, the problem was back then the scooter wasn't starting to move. So if you use the scooter, then you can't, you might not get the same things you want all the time. But at least this one, the stock is relatively strong. Whereas in this particular case, the scooter could still be very weak. So if we put in, let's just pick Synovus, because we know that stock's been beaten down for a while on that same setting. And so the RSI went through a whole period of 5 or 6 months, and then it took off to the upside. That might be too early. And so it might help to wait until the scooter's a little stronger, at least greater than 30 or something like that. So let's try this with .to and just see if that would help us see the problem. So all the way through here, the scooter ranking is weak. We still don't have it here, but now we finally get the scooter picking up, the RSI picking up, and it's hard to get them both on the same day. So you just have to be careful. One of the things I like to do is look for something 4 or 5 days ago, and I'll show you that scan in just a little bit. So anyway, it is possible to set that technical ceiling on an indicator, and what we do by that, and all of this information, like the format of this gets a little tricky, but max in here, if we go get the predefined scan for new 52-week highs, and we put it in here. Yesterday's daily max 253 is the high, so that's the price. Well, we could get rid of that and we could put in RSI, or we could put in SCTR, or we could put in full stow. We could put in whatever we want. But the main point that you want to do is you just want to make this simple. And so in this particular case, we don't want today's high to be greater than, like we can't have multiple conditions, so we have to set it up so there's only one. So in here we're going to go yesterday's daily max, and then we need the operator, whatever is greater than 75 or less than 75, whatever. The point I want to make is go and use these tools down here and just alter them to see what you need. So that is a better way to go. Okay. Let's quickly jump back into the that email that we were looking at, or those ideas, trading ideas. Okay, so so hopefully that answered that question. And here was the picture that the RSI stayed below this level and then shot up. Now, since I'm exploring visual trading and I want to find low ATR and high ATR, so one of the things that this particular scan was 60 minutes. And so what was happening was over a 6-day period, the volatility was relatively low, and they wanted to scan for the end of that scan. Okay, so one of the problems is the scan engine is daily and weekly, so that doesn't really work. And usually a daily chart, I mean, you can get runs of 2 or 3 weeks on it, but by the time you figure out that there's no volatility in the run, it gets a little more difficult. So let's just go find, well, even Apple in here. It gets a little busy because I got too many things on here. Okay, that should clean it up. So what we want, in this particular case, the stock is running relatively smooth, but you can see that the month before, it kind of ran up, then went sideways, then ran up, then ran up. So there are ways to do this, to look for low volatility, and then as the price kind of peaks out, you want to see if there's an increase in volatility. So one of the ways to plot that, the average true range is one method. What you see on here is you can see that as the price gets bigger, the average true range is still moving up. Now, I'm not sure that there's enough of a signal along here, but one of the things that happens is volatility, especially in the indexes, does start to pick up as the market tops out. All of a sudden it starts to get jerky and goes back and forth. So an increase in volatility can help, but it's not always apparent. So one of the other ways to look for that is use a Bollinger Band or something like that. And the Bollinger Bands are more sensitive to volatility. And I'm just throwing out ideas to help you find different trading conditions or find things that you're looking for. So in this particular case, the stock is going sideways for a period of time and then breaks out. And one of the things that you'll notice is the Bollinger Bands are contracting here. The distance between the two is getting narrower. So we could use a tool rather than the ATR or something. We can use Bollinger Band width. What that does for us is it shows us that the price here, the Bollinger Band's getting really, really narrow. And so what I would do is I would say, 14 days ago or 12 days ago, the Bollinger Band was wide, and then 8 days ago it was narrower, and then 4 days ago it was narrower. And now all of a sudden, price is breaking to a new 1-month high or something like that. And And the benefit of that is that you're going to find some sort of a breakout, preferably out of a sideways channel, and it starts to improve. But the other component of that study is making sure that like if you make it your last day has a volatility squeeze, but you're also looking for a 1 month breakout, that's probably not going to work. So you have to make sure that you're only looking for a breakout from a previous time period. So let's just go look in one of my scans here, and I've got one for volatility right at the bottom. Volatility contraction. Okay, so what this scan does is we're looking for 12 days ago, the Bollinger Band width was wide, and then 8 days ago, it got narrower, and then 8 days ago, it was greater than 4 days ago. So it's continuing to pinch down. And then the second thing it's looking for is 5 days ago, the high on the stock was less than the daily maximum for the last 3 months. And then today's high is greater than the 3-month high. And when you take that and put those in, that could work. Now, the other thing you might want to do is go check and say it wasn't at a new high 20 days ago either. So you could put that in. One of the ways to turn that kind of thing on and off is just to put a couple of slashes in the front. And what these slashes do is they're like a comment, so the scan engine won't read them. But if you need them, so let's just say you ran the scan and it came up with too many, and then you backed off this, that will help give you an additional filter. So you could set it up so your filters just change, or you could set up different types of groups. And let's just use this as an example. We could take these types of groups, and just by putting the slash in front, we could control which group it's operating on. So it's going to say group is S&P 500, and now we don't need this line, so now we're just going to comment that out and just let it run those last 2 lines in the scan. And so when we run this scan, we're going to get 2 stocks, and let's just go look at them for the fun of it. So here's Lockheed Martin, and we don't have a Bollinger Band on there, so that's a little hard to see. So here's the Bollinger Band, and what we're seeing here is that the Bollinger Band roughly 3 weeks ago was a little wider, and it's getting narrower and narrower and narrower, and then 4 days ago, so it was still getting narrower than 8 days ago. And then all of a sudden it's starting to push. Now it pushed to a new high, and you can see it's quickly reversed here. The day we're doing this is on September the 25th, and the stock market was down. I'm just looking at the Dow, or the S&P 500, we ended up closing down 5 points. So with that, different scanning style, you could look for a narrowing. And so one of the places, this is a good example of what you're trying to find, is something that was really, really narrow and then starts to break out. Now here, continues to go for another month. Anytime you have a scan, there's another one back here where it's narrow and narrow, and then all of a sudden it pops like that. Sometimes it works, and obviously in this particular case, it's come right back inside the range. But the goal of the scan is to try and show you setups, and I think in this case, the other one was PayPal, the scan result. So let's go look, yeah, PayPal. And we'll put the Bollinger Bands on there. And what we get is, let's just zoom in a little. Okay, so in this particular case, I'm actually surprised this worked, but these Bollinger Bands must have just been slowly getting narrower. Let's put the Bollinger Band width on the bottom. Whoops, on the bottom, and just take a look at that. Okay, so oh yeah, just very briefly, so we probably caught the only point in time that this would have worked, because it was increasing all the way through here and then just gently started to move down. But the bottom line is a lot of things kind of checked their breakout level today. Apple was falling. Facebook had a bad day relative to November, and so anyway, the point being, you can use these scans to help find volatility breakouts and change things like that. But the big gist of it is making sure that I'm looking for the Word document. Where did I put it? Did I close it the wrong way? I might have. There it is. Okay. So, okay, let's just leave that. I think that was all of them anyway, or most of them. So the other thing that I want to go through now is just working through some of these different types of scans. So in this particular case, what this stock scan, and I'll enlarge the print for you. What the scan was trying to find was 10 days ago, the MACD line was falling, was above zero. And then 5 days ago, it had dipped below zero. But today's MACD line was turning back up. And so the stock is just gently pulling back and starts to turn up. So let's look at that on a MACD. So what we should see is it was just gently pulling back and is now starting to perk up, and they wanted that. So in this particular case, they didn't want to find a MACD that was deeply oversold. They wanted something that was just below zero and starting to rise back up again. This is not a bad example. I mean, it looks like a nice place on the chart. You're trying to break out to new 3-month highs. There's a whole bunch of good stuff happening here, but the idea to just use these where they increment down, so 10 days ago, 5 days ago, in today's MACD line, this one also had a full still had to be crossing up, but it's on a daily because there's no word weekly, which is okay. But the one thing I would say on these is, see in here, there's oversold with declining and oversold with improving, and improving Chaikin money flow and declining Chaikin money flow. If we just add these, the point I want to make is that a lot of this coding is today's CMF is greater than 0.2, and yesterday's was less than 0.2, and 2 days ago was less than 0.2, and 3 days ago was less than 0.2, and 4 days ago was less than 0.2. So what you're trying to find is these the CMF has meaningfully changed over the last 5 days, and if you ran this scan without all of this other stuff in it, it's going to show you that. So just go and get this. Now, the valuable part here is the way it puts in the word today's, and puts in the word yesterday, and puts in the word 2 days ago, 3 days ago, 4 days ago. You can change those values to be last week's, and then 2 weeks ago, 3 weeks ago, 4 weeks ago. So you can change all of that information up and put in the word weekly instead of the word daily to make those happen. So I strongly encourage you to grab these existing examples to figure out how to get that iterative stuff to work. Like in here, you have to use the number. Like you can't write in the word TWO. It won't work. It has to be the number 2 or the digit 2. So these are very simple if you just go grab something and then try to alter it. So in this case, you might say whatever the RSI or whatever you want to use, but just go in and tweak them, and I think you'll find much better results. Okay, so this is that same scan, and I'll just blow it up again. This is the same scan, but the difference here is we've changed the words weekly or days to weeks. So let's just go back and look at that other one. So this was 10 days ago MACD line, 5 days ago MACD line, and today's. And the one we're looking at now is 10 weeks ago, 2 weeks ago, and the weekly MACD line. So this weekly. And when we run this scan, what we're looking for is some stocks that the MACD line was declining, went below zero, and now the weekly MACD line has turned up. So 30 of these stocks have done that. Let's just click on the chart, and we'll just go to one of my default chart settings. And Let's see the MACD. Okay, I don't have the MACD on here. I have the PPO. Let's see if I have one with the MACD. I think this one is. Yeah. Okay, so here we have the MACD, and let's use the zoom box just to see the bottom corner. I'm just going to shrink this in a little bit. Okay, so what we wanted here was the MACD was above, got below, and went back above. And so this is working out just about perfectly to show us this. And again, you're just looking for something that has pulled back a little bit and is starting to accelerate up. But by changing the words daily and weekly, you can decide how fussy that is. And it's not very hard to do, but you just have to know. So this has to be the word weekly, LY, and this is 2 weeks ago, 10 weeks ago. And again, you need the digits in here to make that work. All of this is written in the stuff that I mentioned earlier on tonight in the introduction, where it's all written in that documentation, but it's just a matter of knowing where to go find it. And so hopefully these will give you some clues on the ways to improve that. You can also grab all of this stuff that I've written or shown you here and just type it in exactly straight into the box and try and work with it. But now I'm going to get into some stuff for people who want to do dividend investing. And the reason that the scan engine can be so helpful here is you can actually set up the minimum yield or the maximum yield. So in this particular case, I'm really not interested in a bunch of small cap stocks. So I'm only going to look at, in this case, the TSX 300. And the way I got that was I went down to grabbing it over here under indexes and ETFs and just look at Toronto. Now you might want to choose the S&P 500 or all of the Dow 65 stocks or whatever, or the NASDAQ 100, whatever you'd like, just put that in there. And again, remember the first command can't use the word and, but everything else can. So in this case, it has a dividend and you can pick the yield. Well, let's just change the group here. We're going to go to grab our indexes, and we want to scan, I don't know, let's just stay with the S&P 500 and add it. Now it's going to put it at the bottom, so now we know how to type that up. So we'll just go SP 500 and then get rid of that row. Type is stock and the volume is whatever. Obviously, everything in the S&P 500 is going to trade more than 40,000 shares, but it has a dividend. We want it to have a minimum yield of 4%, and we want to rank it by yield. So this is going to pop up a scan. Let's just check my syntax and make sure I haven't made any typing errors. So it says everything is going to run fine, and we're going to run the scan. Again, it comes in on a separate tab, and so we get something. Now on this page, again, it marks the word yield over here. But as I mentioned earlier, if I save this, so available actions, and I'm going to go replace an existing chart list with these results, and I'm going to go pick one of my scans. Let's put it in my scanning Martin file, and I want to preserve the sort order. So it's going to take this order with CenturyLink first, and Mattel next, and Seagate and Macy's and L Brands, and keep them in this order by putting numbers in front of the title. So it's going to go 0010. And so we do that. So here it's 0010, but you can see this looks changed. Well, if I sort by that same sort order, it will put it all in order. But the problem is now we've lost the sort. So what I like to do is just hit the tab back, cancel this, and keep this yield page up, and then go make a new tab. Go grab this new tab and go back over somewhere around here. Let's just see if that's the right one. Yeah. Okay, and we're going to just jump into the ticker cloud, and then we're going to grab a stock. And then we're just going to go down to Martin's chart list. And that's going to pull them up. Now, we don't know what the yield is here. One of the things we can do is we could go, turn on the full quote panel. And what that will do is that will give us this yield information up at the top here. Now, one of the problems is it's only in the first chart. So if we go to the bottom of this page, we can apply this style to all now, and it's going to put the full quote panel on each one of these charts. So even though I didn't have it before, now I do, and you could do the same thing with the RSI or anything else, but you just modify this, the chart information, and then go in and put this in, and then it's available to you. Now, we know that CenturyLink was the top one, and the next one dropped down to 8% Mattel. And obviously, usually it's some sort of a stock that's pulled back, and we have to decide if we want to own it yet. So, we're looking at a 7% holding. This is again, these are S&P 500 stocks, but look at how low the scooter is. And here's Iron Mountain with a 5.5% yield. But the scooter is very strong, so at 87. So looking over here on this chart list, we can just go grab Iron Mountain, and we've got a stock that's still surging. We get a yield of 5.5%. It looks to me like we could continue to grow capital and get a high yield. Now, you want to do this every day because you probably wanted to catch it when it was breaking out of here, not after it's run all the way up. But the point would be just running something simple like this dividend scan. This, there's not a lot of lines of code in here, but the important thing about it is it shows you, if you're a yield oriented investor, you can make sure that everything you own is going to start paying you money. And one of the things I like is you can go back 5 trading days and run this scan again. So let's just go run it and grab the scan results. And when we did that, well, I guess it wouldn't be a surprise that it had all of the same companies in it. The yields were probably still the same. Why? I would have thought a little different. It probably just changed the yield. So these same companies are listed, but they all have, yeah, that's it. So I was asking for yields greater than 4%, so they all do, but the actual yield percentage might change based on that time. So using these tools, you can very quickly orient. So here's AbbVie, and it's got a yield of 4.4%. Is that something you want? I don't know, but like I would look, here's Occidental Petroleum, 4.75, Ford at 5% yield, and with a scooter at least in the top half of the table, that would be more important for me than finding something where the scooter is still very, very weak. And, maybe there's a few of these that are starting to improve, but, let's just go to some of these oil field services because they've been starting to perk up. But, the question is, do you want to find a yield that low? And I think the big thing about looking for high yield is a lot of times you have to give up price. Well, in this particular case, if you do this scan all the time, you're going to find some stuff that is pulled back or is at a nice support level or an entry level where you might be interested. This particular stock, just taking a look at it, this is the full stochastic turning up on 20%, and it's saying, this is okay to buy this thing here. You're at a nice low place. Now, it's been living down in a low range for a long period of time. I almost like that. It senses to me that at least the majority of the down selling is over and it's actually trying to break out. So that could be another criteria in your scan. Let's go look at some other ones. So this particular scan here, I found just going through these scan pages over on the side here. What you see is there's a bunch of predefined scans. So this will just allow you to go and literally cut and paste it, but I've shown you how to find those right on the scan engine. But there's also some other ones. Here's a scan results one. Let's just see. No, this isn't the page I was hoping for. Let's see if that is. No. Okay. So on here, there's user contributed scans, which I was thinking I had open already. But, you can find stuff with strengthening strength. So things are improving, a pop on the stochastics, momentum buy signals. There's just a whole bunch of them in here. And you can feel free to go grab these and you literally highlight just you're going to grab the left side, highlight the whole thing, including all of the brackets, and copy and paste that in. And you'll see what you get on these scans. And so it's trying to describe them all to you, but you can go in and find these. So here's Howard Pasternik's Bollinger Band method, and you can work through some of these. So there's quite a few of these pages hidden in this introduction to scans, and just feel free to look around. So published scans by StockCharts. These are other people that have put them in. So here's a key reversal day, Gary Smith, Tom DeMark, looking for something that's been trending really, really hard and then changes. Looking at that, and Richard Estes buy scan. All of these are just sitting in here, and all you have to do is go pick them up and run them and see if you like them. So that, I think, is probably one of the more valuable lessons from the scan engine, and how you can take that information and just go grab it. Okay, we did those. Let's go over here and just see if I've covered them all off. Yes, I did. So the one thing that's very important on the yield one is the rank by feature has to be the last thing, and it's the only one that doesn't get the word and I don't know why, but it doesn't have the word and I would put it in there for consistency if I could. But the bottom line is it won't work. So let's talk about when you've screwed up something. And so when we say the dividend is, and we'll just put in the word yes. And when we go to fix this scan, or when we go to type this scan, it runs and it says invalid expression, has dividend is yes. And you could have typed this wrong. So you could have typed the word true with whatever, just a spelling error, or you missed a button typing. It's going to try and point you to the information. If I miss a bracket or something down here though, and I run this, it's going to say there are mismatched square brackets. So then you'd fix that, and then it's going to come back and tell you that you still have a problem that true is. So one of the first things it checks for is brackets. These are simple things to fix, but if you can't find it, what you can do is just comment them all out. So you literally put slashes in front and go like this, and then say check syntax, and it says your syntax is correct. So the first line is right. Now I change the second line, and it says, oh, has dividend is true. So I go in and I fix that, even though it has nothing to do with the brackets. So I check my syntax, and now I have that line right. And then I take out these comment characters, and I check the syntax again, and it says there are mismatched brackets, and I go, oh yeah, there's only one bracket there. So I put in the other bracket and check the syntax, and it says your scan is correct. And now I get rid of the last line and check syntax. So if you can't understand what it's trying to tell you, then go back to these comments and just comment them out and work through it one at a time. And if you can't find the something that's wrong in your code, then just go get all of those examples I just pointed out from that first page that has, really professional scans that are written in there by some very smart people, and feel free to find one of your ideas in there or modify it from there. So hopefully I've shown you how to take that information and generate that scan. Now, the second part of this, I'd like to just show you. So if I take this information and run this scan, one of the things that we're going to find is that the scan engine runs this every day, but you have to run it. And that's all right, but quite frankly, wouldn't it be nice if the computer would just grab this and do it? So here's your scan results, and it's got whatever 33 entries for today. If you wanted this to run automatically, the way you're going to do that is just go, and instead of being in the advanced scan engine, which is where we started, we're going to start in the technical alert workbench. And I had taken that code from that previous scan and copied it, and now I'm just going to paste it in here. The difference is that in an alert, you can say, I want this to do it all day, or I just want it once a day. And if the number of results for the following criteria is greater than whatever 0, alert me, and either send me an email, a text message, or or a pop-up screen on the workbench. So it's literally going to come up as a frame right on your page, and then pause it. Well, we don't want to pause it. We want to say run this every day. So in this particular case, after the market closes, it's going to scan for all of the stocks that have this condition, and then it's going to alert me via email and automatically continue this. Now, one of the things you might add on to this scan, again, you're going to have to put it above the rank by line, but you might want to add that stuff about looking for a new 55-day high. So go back to one of those other scans that we had up here before, and we're just going to try and quickly grab one here. Scan workbench. Okay, so here is 55-day high, and we're going to copy that, and now we're going to go way out here to the ones we're working on now. I've just got so many tabs open. Let's just find this page. Where were we? Okay, there we are, alert workbench. And so in this particular case, the yield, we're going to look for all of that. But rather than do that first, let's put in, before we look for the actual yield levels, we want it to have a dividend, so that's going to narrow it down. And then we want to know that 5 days ago, it was less than the high, and today's high is greater than, and then we run that scan. Check our syntax, make sure it's okay. Your syntax is correct. A pair of clauses are joined by rank by, so I must have something below that. What did I do wrong? So you're a pair of clauses. I don't think so. So check your syntax. Did that get it? No. Rank by yield. Oh, you know what? Here's the expression that I should have paid more attention. Your alert syntax is incorrect. So not just a general, but the alert. And what it says is it must be joined with and or. And it makes sense. I can't use rank by when I'm doing the alerts. And the reason is because it's literally just running to say all of these stocks, and it's not putting them in a chart list or giving me a page. It's actually going to send me an email. So there's no way to rank it by that. And so what happens at the end is you're going to get an email like this that'll tell you all of the stuff that was the full sto scans that came in for a whole week, as an example. And I'll get into that in just a second. But we're going to take all of these. And when these scans come in, you get a list of them. And so there's a bunch of these are on the venture exchange. I don't trade on the venture. But looking at all of these alerts is, a great way to go. And so this email will come in once a day and tell me everything that I've got. So now that we know that's what we're expecting, it would make sense that I can't get a rank by. So if I just take that out and check the syntax, we're going to find that that's probably okay. And so now we could, as an example, just run that that alert. So, and in order to do that, we need to save it as whatever. In this case, we're going to call it the dividend and 55-day high alerts. And so you would hit that, and then what's going to happen is when the market's closed that night, every time it closes, it's going to send you that piece of information. Okay, so we've covered that off, and we've walked through the alert settings. I think the important thing, so you can create lots of alerts as a pro member, and so these are all the ones, and anything that's paused was specifically for one stock. So in this particular case, I was looking for Crescent Point and a weekly full stochastic turning up above 20, and so it says on this previous page we were on, this paused on September the 19th. So if we just go look at Crescent Point, cpg.to, and that was for a weekly scan. And what we're looking for here is a scan basically telling us when the full stochastics finally gets back above 20. And sure enough, it's on its way. So the real question is, do you think the low is in? in this particular stock, and I actually do. But the bottom line is that that scan is a pretty important scan. So it wasn't until, and I'm recording this on the 25th. So on last week's bar, we finally got the indication that something had changed. And you could see that this stock was stuck below the 10-week moving average all the way down this hill and is now moving above. There's still a 25% gain to get to the 200-day moving average or the 40-week. But in general, it looks to me like a base is being built. Maybe it'll need to build a little right shoulder here or something to get above this $10 neckline. But I think for everybody who's been following, I've been quite bullish on the oils. And so we'll start to see if anything's going to change there. But the point I would make on a scan or on those scan triggers is when you get them, you don't have to do anything with them, but it's going to run them for you every day, and you can quickly look through the list that comes into your mailbox. And let's just see if I can pull that up again. Is this it? Yeah, this is it. So anyway, looking through this list, I could say CN Rail and CP Rail. Gee, both of those are starting to turn up. Maybe I want to own those. And so I could go take a quick look and just see if there's anything here for me. And, real quick with a quick evaluation, noticing that both railroads are there. Now, the other thing that happens on these, as an example, it could be all oil stocks, and imagine that in September when price finally got above $50, we get a bunch of oil stocks letting us be educated on that. I think the point is when you can look through those lists and see lots of different chart types, that's going to be way more valuable. So going back to the members tab. The big difference between the advanced scan and the technical alerts is these you want mailed to you once a day, or you want them to show up as a text message. And on the advanced scan workbench, you want to run these manually. So the alerts are only going to run for the day you're on. You can't go back in history, whereas you could take the same code, put it into the advanced scan workbench, and then you could go and just look at how it was working previously. Okay, what else do I need to cover off here? So we've covered off the advanced scan workbench. The standard scan workbench is getting, I find the advanced scan much easier just because of the way you can copy everything in. So that's the one I always work on. With a pro membership, you get a whole bunch of scan options, like in terms of number of favorites. And I think, I've got 92 of 300, and I think an extra member gets 100 or 50 or something like that. And on the alert engine, you get 50 alerts. Oops, that was predefined, my mistake. Let's just go over here. Yeah, 26 of 50. And I think with an extra membership, you get 5. Now, obviously, I've got a lot piled up here. I don't need all of these, and some of them have triggered. So then I would just go through, and you can just hit the garbage can and say, throw that out, and just work your way through them. So as they come in, you can just get rid of them. But on the ones that you've got running permanently, right, the full stochastic scan, that was the one that we just saw for Crescent Point. You could just look at those, and it's continuously running, and so I get an email every day for those, and I can go in and look. The idea behind these is just to make your life easy. There's no real preference. If you like getting it in your email, that's the way to do it. If you want to manually run the scans every morning, go ahead. But the critical component is you could have it run for you at the end of the day, come home from work, or if you have a regular day job, do that. Or if you like to get up in the morning and look at it, it's just sitting there waiting. So I think the alerts, a fabulous tool, relatively new, and really been updated recently by great work by some of the programmers at StockCharts. And I would encourage you to jump on those scan tools and just hopefully really improve your trading results by picking better entries. And you can also use it for exits. You can have it scan your your current stock listing for whatever you want, full stows breaking down, or new 3-month low in scooter, or whatever, anything that you'd like to do. So thanks for taking the time to join me, and thanks again.